Good morning, everyone, and welcome to the Daily Trader with Kevin Hinks, a home suburban Chicago version of Daily Trader today. First, let's get to our macro minute. There's an interesting thing going on that we have to pay attention to. Number one, calendar. Make sure you understand where you are on the calendar, seeing that next week is Thanksgiving week, a holiday week, a slower week for trading. Wednesday will be a big data dump with durable goods, GDP, and personal income and outlays, and jobless claims. So the data dump next week will be on Wednesday. Make sure you understand that on your calendar. And then things will get awfully slow going into Wednesday, Thursday, half day Friday. So make sure we understand that. Then today's activity. Look at the strength of the US dollar. Why is that? Eurozone PMIs contracting overseas. We got that about 2 o'clock this morning Eastern time. The Eurozone PMI composite 48.1. That's a big miss. Here's what we're coming to grips with. The U.S. economy is so much stronger than the European economy. And those failures of their data and the strength in our economic data, our PMI came out 55.3. That's much better than expected. Though that combination is making the US dollar rally. Now, it's a good problem to have. The US economy is the strongest economy in the world, but we're coming to grips with what the product of that is. The US dollar is rallying. Yields have been relatively quiet today. That's a good thing for the overall stock market, but the US dollar on an 8-week run now to recent highs is pretty spectacular. So that's where we sit in our macro minute. But make sure you understand, next week will be a slow week in overall earnings and data, except for Wednesday. They'll throw a bunch of data at you on Wednesday ahead of the holiday and then be done. So with that, let's get to our trades for the day. The first one we're going to look at is Amazon. Amazon ahead of Christmas shopping, ahead of everything we're doing here. But there's a bigger story here. Their $4 billion additional investment in Anthropic. Now, what is Anthropic? Anthropic is an OpenAI rival in terms of, AI. Here, I'll give you the details. AWS is investing in Anthropic. Anthropic is then guaranteeing to only use Amazon Web Services for their division. They're working with the Amazon chip making division to make more chips and collaborate. So this is a pretty solid news event for Amazon. I know the stock is down slightly today, and it's down off its recent highs. It got as high as, check on the chart, $215.90. Now it's back under $200. So is this an opportunity for Amazon? If you think this is good news, if you think that Amazon is showing dominance in e-commerce and more people in terms of adaption are using Amazon. The paper money practice trade that I looked at today in Amazon was something in the diagonal family, basically buying the downside move in Amazon and preparing for a recovery into the end of the year. So what I did, I went out to the December 13th expiration. I bought the 195 call, which is pretty much at just $2 in the money in Amazon. It's currently trading 197 and some change. Bought the 195 call, sold next week's November 29th, Thanksgiving week. I sold the 202.5 call. What is that aligned with? Look at the expected move for next week, about $6.50. Add that in, and you're right around the 203 strike. I'm selling the 202.5. So those implied volatilities for next week will be a little lower because they're anticipating a slow week. Doesn't mean it guarantees a slow week, but it could be a slower week for stocks. So the call diagonal in Amazon, buying the 195 all the way out until December 13th, and then selling next week's November 29th 202 call. I've got it trading right now. I think I put it in right around $6. It's trading around $5.90 right now, a little lower as the stock has worked its way lower. So that's our first trade of the day on Daily Trader. Amazon, using not only the anticipation of holiday shopping, but the news of the $4 billion additional investment in Anthropic. You can read about it. It's pretty significant what they're doing, working together. The division of Amazon is called Annapurna, is the division, is their lab division of Amazon that they're working with. So pretty exciting news there, and a big investment telling you that AI is still in its earliest phase. Now, our second stock of the day is Meta Platforms. Meta Platforms is another stock that has come significantly off its highs. These stocks all had historic runs. It was as high as $602, almost $603. Now it's $558. So this stock, in an era where AI is helping them in targeting ads. What do I mean by targeting ads? That means when you go on Facebook, when you go on Instagram, those ads that you're seeing, they're reading your data, reading the things you click on, and sending those ads right to you, which means for an advertiser, it's less misses, right? You're not sending a 80-year-old grandparent running shoes, right? You're not saying, you're not saying a 10 or 15-year-old, you're not saying the adult products, right? All the ads target the people there, and it really is the key why advertisers are moving away from linear programming and towards Meta Platforms and Amazons and all these digital platforms. So, but that being said, look at Meta Platforms has sold off over $47 off of its lows to where it is now, and it's down again on the day today. So what we're looking at here in Meta, it's in the same calendars, it's same family as what we did for Amazon, but a little softer, which means we're doing the calendar spread, not the diagonal. What are the differences? Less delta, usually less net debit, although this one's a little bit chunky in Meta because Meta's a $500 stock and Amazon's a $200 stock. That has to come into play there. So what I looked at here in Meta, just to keep it uniform, bought the December 13th, sold the November 29th, practice trade in paper money, the 575 call calendar. Now, that's about $18 higher than where it is from here. And it's you're buying 21 days out, selling 7 days out. And this is a more passive bullish play. What I mean by that, it's only about 15 deltas, not zero, not a small amount. And the risk on these trades, make sure it's very important that we always talk about the risk. The risk on the call diagonal, the risk on the calendar spread is the debit paid. That is the maximum that you can lose on these trades. So make sure you understand that. We're buying the December 13th, selling the November 29th, 575 call calendar, trading right now about 670. I put it in a little higher than that in the example that you're seeing on your screen, but it's trading now right around 670, 665. So a little bit lower than where we put it in because the stock has moved a little bit lower throughout the day. So remember, it's the targeted ads and the growth in the advertising business that remains critical for Meta Platforms. They make 95%, a large percentage of their income comes from advertising, and that ability to target ads and now use AI to do that, you know what it's covering up? It's covering up the losses in the Reality Labs. The Reality Labs revenue is growing, but they still have substantial losses. And this AI, the new focus, takes that off of everyone's radar. And these investments that are paying off now for a company like Meta is a strong chance for performance going into the end of this year and the beginning of next year. So 2 trades today on Daily Trader. A call diagonal in Amazon, a call calendar spread in Meta Platforms, and we talked about the differences between the two. All right, everyone, that's our show for today. Enjoy your weekend. We'll be in Miami for the market drive make sure you understand that these trades, the risk on these trades is the debit paid. Have a great day, a great afternoon, everyone. We'll see you soon with another edition of Daily Trader. I'm Kevin Hinks.